Hey everyone, today on the Final Bar, it's August 15th. We'll talk about this continued push to the upside. Friday finished in a position of strength. More of the same here on Monday with the S&P glancing up to 4,300. Overall, breadth conditions remain strong, but a bit of a defensive feel to the leadership today with consumer staples and utilities, the top two sectors. Energy giving back some of its recent gains. What does this mean as next steps for the S&P and the NASDAQ? Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the power of technical analysis, behavioral finance, investor psychology, and using stock charts as the vehicle to really understand the dynamics of the markets that are happening around us. I always tell people, particularly my premium subscribers of Market Misbehavior, about having a good situational awareness or good market awareness, right? Having a good sense of what's going on around you. And by having a good routine of analyzing charts, of having a good set of charts that you follow consistently every day, every week, and also using screens, the scanning tool, for example, to identify when stocks are rotating. If you do that consistently, and that is the key, a consistent application of a good process is going to help you stay on top of things pretty well. There's no denying, coming off of the June lows about 2 months ago now, just an incredible run to the upside. All the great things that make you feel so optimistic about this market, leadership from growth areas, stocks like Apple moving higher, that's all encouraging. But unfortunately, those are also providing some of the challenging narratives going forward. Stocks are overbought. The S&P is overbought for the first time since last November, maybe unsustainable. Look at some of the evidence here in a short while. Did want to let you know about the schedule coming up. We had some really fun conversations this last week. I'd encourage you to go back and go through my previous discussions. Ari Wald had some really thoughtful points. Also, Mark Newton last week. This coming week, on Tuesday the 16th, we have JC O'Hara from MKM Partners. On Wednesday the 17th, David Hunter, contrarian extraordinaire. And then on Thursday the 18th, Jeff Hughes from JWH Investments. Also, just so you know, we have an incredibly meaningful event coming up the first weekend in October 7th and 8th, called ChartCon. We last did a ChartCon virtual conference in 2018. We are super excited. After a few years off for the pandemic era, we come back with a new virtual event. This is going to be absolutely fantastic. Headline presentations by Linda Raschke and Larry Williams, two of the best traders in the business, educators as well. And then a lot of really cool deep dives into particular sectors, into sector rotation, into managing risk in uncertain times, looking out, having a market outlook discussion, including one where you all get to vote for what you think is going to happen to the major benchmarks. You can go to StockCharts.com/ChartCon or just scan the QR code you see on your screen with your mobile device to sign up for that event today. Let's continue on with our market recap. On Monday, we like to do 3 steps to our process. We start big picture. We talk about the overall market environment. Then we go through sector rotation. Then we finish up talking about some individual stocks. It is a quick, brief taste of the type of analysis that I do every week for my own process. And I just want to share with you some of the highlights here today. Let's start with the major averages. So the S&P 500 just touching 4,300 here about half an hour ago as we're going live after 4 p.m. Eastern. Finishing the day up 0.4%. The NASDAQ outperforming on the upside, up 0.6%. Mid caps and small caps up as well, but the large cap index led the way, and the VIX actually pushing a bit higher today, even though stocks were up. So remember, as we often think about stocks go higher on lower volatility because of that inverse relationship, it doesn't always match up. So you actually see the VIX popping up a bit. Now, that's interesting because if you look at the major tops in the S&P going back for the last year, it's usually been when the VIX is right below 20, which is right where we're at today. So keep an eye on that chart of the VIX. Let's look elsewhere. Now, interest rates remaining muted gives room for growth areas in the market and in general, the major averages to move higher. Big reason why the S&P was down in the first 6 months of the year was because of rates pushing higher, obviously driven in no small part by the activities of the Fed. That changed in mid-June as you saw the 10-year yield come down from over 3.25% down to below 3%, which is where it remains now, just around 2.8%. Two of my conversations last week talked particularly about interest rates, and I'm thinking my conversations with Ari Wald and Mark Newton, two different sides of the coin. I'd encourage you to review both of those because they are two thoughtful analysts that I respect and have followed for years, a bit on different sides of the coin. If you think rates are going to remain low, that gives a lot of space for stocks to go a lot further than they have already. But if you think rates have come down enough, and that they're most likely going to go higher. And I have to be more on that side of the camp, just given the trajectory that the Fed has sort of outlined for the remainder of the year. I think that puts a lot of pressure on stocks that have had so much growth going into this week and could provide some weakness here in the next week to a couple weeks, couple months. The dollar index, by the way, pushing back higher today, which is interesting. Strong dollar was one of the reasons why the market had trouble really mounting any sort of significant gains in the first half of the year as well. Stronger dollar, weaker gold. You can see gold and silver prices down today. Gold down 1.3%, silver down even more, about double that, 2.5%. Broadly speaking, the commodity complex was down, and the energy sector is one of the few, if only the only one that was down today. All 10 of the most common coins that we track on the crypto space are all down today. Bitcoin currently right around 24,000, Ether just below 1,900. So look at a chart of the S&P 500 here to continue our discussion of the big picture macro environment. So the S&P continued to push higher today and getting above a 50% retracement. If you look at the January high, which was just above 4,800, you look at the June low, which was just below 3,650, we have now retraced over 50% of the way back up. That's pretty encouraging. The challenge is we are now facing some pretty significant resistance levels. Just above 43.27 is where the 200-day moving average is as of the close today. Just above there, the 61.8% retracement, just below 43.70. So while we've had an incredible run, I'm concerned when I see the market rallying, becoming overbought as we reach a key area of resistance. This could be where we set up to exhaust this upward trend. You have an exhaustion of buyers or an influx of selling pressure, people taking profits that expertly bought at the June low and now are ready to book some of these profits. That can cause some of the selling to manifest and can provide lower prices here. Now, the question is, what happens next, right? And I would say the strength that you've seen, the fact that the S&P is overbought, the fact that so many stocks have had such good runs, probably tells me that the path of least resistance, generally speaking, is going to be higher now. We're more in a bull market phase. My market trend model now bullish on the short term, medium term as of a week and a half ago. All of that tells me to expect higher rather than lower. However, with the run we've had, you have to expect some sort of pullback. And I think finding that higher low that eventually develops is going to be the game for a lot of investors. Now, when we talk about breadth, to finish off our discussion on the big picture, we have to talk about the advanced decline lines. If you look at the New York Stock Exchange, the S&P large cap, the mid cap, and the small cap indexes, all four of those as of Friday are color-coded bullish green for me. That's because all of them have regained their 50-day moving average, and all four of them have now regained their June highs. If and when that would change, I would turn them back to a neutral amber color. But overall, the breadth is strong. When the market rallies on weaker breadth, that's when you have to question the sustainability of the move. That question mark, I think, has been changed to an exclamation point by the fact that all of these breadth measures have now turned positive. Now, again, the concern any technical analyst should have at this moment, myself included, is when we've had such a run and so many stocks have had such a push higher, these breadth conditions can't just go up like this in perpetuity, right? They can't just keep going up like this forever. At some point, you have some meaningful pullbacks. That was the game last year, by the way. Remember, most of 2021 was talking about where we're going to see those pullbacks. And I think that would be the question I would have for the market right about now. Our next segment is called Sector Setups. We talked about the overall performance of the major averages. Again, the S&P and the NASDAQ, again, pushing higher today. That's impressive. And again, I think the trend lasts until it doesn't. Keep watching those charts. Keep watching the trend evolve to the upside. But let's now look at that next layer down and talk about rotation. What's interesting on a day today, and again, this is one day, so we can't draw too many broad conclusions on one day's trading, but it's worth paying attention to the fact that today you had the market moving higher, But the two leading sectors today, consumer staples and utilities. Consumer staples up about 1%, utilities up 0.8%. Those are the top two performing sectors today. So the market's moving higher, but it was pretty defensive stuff that was actually pushing the broader averages higher. The growthy stuff was a little bit in there, more of a market performer. Technology basically in line with the NASDAQ, a little bit above the S&P 500. On the downside, what dragged the averages down or held them back a little bit, I should say? Energy, the worst, down 2% today, followed by materials and financials, which were essentially flat. They were goose eggs for the day. And so it was really defensive and then some growth stuff that led the market higher. Now, again, that's one day. So think about those trends over time. But the relative strength of utilities could be a really interesting one to pay attention to. Having said that, let's look at the RRG. This is the relative rotation graph. Julius DeKempener did such a fantastic job. I'm so proud of him designing this years ago and helping to proliferate it. So many, I think, have learned this discipline of looking at rotations using his methodology, and I think that's fantastic. I would point out, by the way, at ChartCon, Julius is going to give a sector overview, and then we actually have three different experts who are going to dig into three particular sectors and sort of continue the discussion and end up on particular ideas and themes in those sectors. So that's another part of the really cool ChartCon event we have coming up in early October. Now, what's it look like today? Using the weekly data, you see energy has been weakening overall, still outperforming using the weekly data, but the relative strength has really evaporated. Now, this is over the last 2 months where you've seen the growth areas of the market, like technology, like consumer discretionary, actually emerging in a position of relative strength. And while energy has bounced quite a bit here in the last week or two, still overall struggling to mount any sort of relative gains because it's been pulling back while the overall market, the indexes, the growth-led benchmarks that we follow have been pushing higher. Only one of the 11 S&P sectors, by the way, is in the leading quadrant today, and that's technology. Now, this is quite a change. Last week, we had none of the 11 sectors in the leading quadrant. Today, we actually get finally following through with technology going higher. The next one, the closest one back there, I would say would be consumer discretionary, which is still in the improving quadrant, but heading in the right direction, northeast. These other sectors are pulling back a bit: healthcare, consumer staples, utilities. I would point out that in each of those sectors, there are some fantastic individual stocks that are actually doing just fine. And when we get to our next segment, shifting stocks, we'll talk about biotech. We'll talk about some consumer staples names, which are actually breaking out very, very nicely. But broadly speaking, it's been growth versus everything else. Keep an eye on this RRG, by the way, and if and when these start changing, that will tell you that the market configuration is changing. When the market gets a little more defensive, you most likely see the XLK, the XLY rotating to the downside. That would be another warning sign that things are starting to rotate to the negative direction. Let's look at the 11 S&P sectors using the candle glance function. And what I always tell people about candle glance, the candle glance tool on StockCharts, it reminds me of years ago at Fidelity. We had a lot of paper charts and we would spread them out on a table and start to group them by certain patterns. Which charts were very bullish, which charts were bearish, which ones were in the middle. And then you could start filtering through each of those buckets a little further. This basically is an electronic version of a really healthy exercise to look at a bunch of things at once and just start to see what jumps out at you. You know what jumped out at me today as I was preparing for the show? It was the defensive stuff, right? It's utilities actually making a new 52-week high. And sorry, I got to zoom out a little bit. Look at the XLU making a new 52-week high today, getting above $77 a share for the XLU. Going back here, that's utilities there at the bottom. The other one I would highlight, consumer staples, actually breaking out of a nice range, pulled back recently to the 200-day moving average, and now bouncing higher. You see this breakout from the June low, hitting the 200-day moving average, stalling out a bit, but then finally breaking through, pulling back a little bit, and today rotating to the upside. This is why charts like LW, Lamb Weston, we'll talk about Brown-Forman, BF/B. These are some of the many names with the consumer staples, just showing these nice constructive patterns. Now, you'll notice at the bottom, the relative strength is going down, and that's the challenge. While consumer staples are doing okay, other sectors are actually accelerating much more. So while the absolute price is going up, the relative strength is lightening up a little bit. What I will always tell you when you're thinking about sector allocations, when you're thinking about where to rotate, generally speaking, more broadly speaking within a portfolio, you want to be in places where the relative strength is improving because that tells you you're outperforming the benchmark. it's easy to get confused when everything is rallying, which pretty much has been the case off of the June lows, right? Feels like everything in the equity space is having a nice bounce, even cryptocurrencies and other things. The relative strength line helps you understand if you are owning things or if you're looking at things that are leading out of the lows or things that are being dragged up from the other stuff that's really serving as the leadership. So make sure you're in things where the relative strength is improving. Now, where else do you see improvements? Healthcare is another one. It kind of reminds me of this chart of consumer staples. This is what the XLV looks like. I'm drawing a trend line here from the May high and the July high. Look at how we broke above that trend line, pulled back, and now rotating higher, making a new 3-month high today as of the close. Again, the relative strength is off a bit because it's been lagging behind. It's been chopping around while the growth stuff like tech and consumer have been doing much better. But I like this setup. You know, a lot of the technology names are overbought, showing signs that they most likely start to roll over. Healthcare is not overbought, and a lot of the healthcare names we could look at if we had time, are not overbought yet, right? They're actually showing more of a healthy configuration within the trend. So I would be thinking about some of those areas of the market. They're actually holding up just fine. Now, finally, we'll look at the technology sector. This is the XLK. What's encouraging about this chart is we're breaking higher. And I don't have this trend line notated, but I will do that right now before your very eyes. We take the high there in January. We connect that to the high in March. We connect those two lines. This is why the chart of technology looks so constructive, right? Because if you take a trend line from the high in December, the high in March, we've now broken above trendline resistance and have pushed higher. We hit the 200-day moving average almost on Friday on a closing basis. The week ended with tech right at the 200-day. We're pushing a little bit further. So that's encouraging. Here's my problem as we get ready to head to the break. Here's the RSI. Here's the relative strength or the relative strength index of the XLK. This talks about price momentum. A lot of individual names like Apple are overbought. The S&P 500 is overbought. The technology sector is overbought. Now, overbought in general, in the long term, is a good thing. That tells you that stocks have had a good run. They usually go up for a reason. But the question is sustainability. Do we get a pullback? Do we get a drawdown here because they've had such a run? When we come back from the break, we'll look at some individual names that fit into some of these sectors we reviewed. So we'll see you back here in 1 minute for Shifting Stocks. Hey, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We so appreciate you joining us every weekday after the close for our show. We have a lot of fun putting the show together, and we have a great team behind the scenes like Zach, our technical director, Gretchen, our producer, and many others in our graphics team, our editors, and so many. Proud of the team for what we're able to produce every trading day. We would love to hear from you. Feedback on our show is absolutely welcome, but we're especially interested in your questions. We'll do a mailbag segment on Tuesday's show, also Friday of this week. We'd love to feature one of your questions live on the air. Our email is thefinalbar@stockcharts.com. We are on Twitter @FinalBarSCTV. We're on YouTube. Put a comment below the video you're watching on our Stock Charts YouTube channel. We'll gather all those questions. Hope to answer one of yours live on the air on Tuesday's show of this week. Also, go to StockChartsTV.com. That is our on-demand platform. We have put out a ton of content in the last couple of weeks to help you make sense of these markets as the S&P, the NASDAQ, have ripped off the lows in June as so many question marks have emerged about what's next. We have people like Larry Williams, Martin Pring, Gina Martin Adams, Tony Dwyer, many others sharing some expertise with you, all available on demand at StockChartsTV.com or on your mobile device. Just search for Stock Charts TV on demand. Let's continue on today's show with our final segment, Shifting Stocks. What we like to do is now complete this three-pronged approach to market analysis. We talked about big picture, the run that we've seen in major averages, approaching resistance, overbought. We talked about the sector rotation, a bit of a defensive feel today, and some of the defensive sectors emerging very nicely, but the strength has clearly been in some of the growth leadership like technology. Let's talk about some individual names. I want to start with biotech, actually. I have to credit Mary Ellen McGonigal. She was on, I feel like she was on my show or The Pitch. They all blur together at some point, but I remember talking with her probably about a month ago, maybe a little more about the strength in emerging strength in healthcare. And we talked about things like even pharma. We talked about biotech, about some other spaces in the market. Great call from Mary Ellen, because those areas of the market have actually done very, very well. And on a relative basis, some of these have not emerged too strong. So biotech hasn't been a great leader, but on an absolute basis, incredible run, right? And what I like the most is the runoff of the June low, this pattern, which you could probably call a pennant pattern, which is a big run. And then this consolidation, lower highs, higher lows. Look at how that resolved just beautifully the first week of this month in August to the upside, now getting above its 200-day moving average. That's a nice breakout, a nice potential run. We're testing the April highs right now, and that's a level I would look at around 135 on the IBB. That's the biotech ETF we're looking at. Now, one of the names to highlight is having a decent day today, Vertex Pharmaceuticals, which is up about 3.75% today, almost 4% today. Bit of a different look to this chart because this stock has been running very nicely for the last 8 months. On a relative basis, the relative strength on Vertex has been very, very strong, as it's been handily outperforming the S&P 500. Now, it's pulled back a little bit to its 50-day moving average, broke to the upside. Look at how this 290, 295 range became resistance. We chopped around there for a couple months, and now breaking out to the upside. 290 was the pullback level here last week. Friday, it was off the pullback level and now pushing again to the upside, making a new 52-week high today. One of the challenges to this market when you question sustainability has been the lack of new 52-week highs. Names like Vertex that are able to power through previous resistance levels, able to consolidate and then rotate to the upside, tell you that there is additional demand. People are looking to own stocks and take on additional risk. These charts will tell you when that's no longer the environment. But at this point, the market seems to be going higher. Again, I was taught by one of my early mentors, Paul Montgomery, who ran a newsletter called Universal Economics for over 50 years. He passed away a number of years ago, unfortunately, but one of his quotes was, the most bullish thing the market can do is go up. So follow those charts and follow those trends as they continue to push to the upside. Tesla is obviously a name many follow, having a decent day today. I just want to highlight some of the stocks that were big movers today. Tesla 3% to the upside, handily outperforming the S&P as well, back above the 200-day moving average. Now, it got above the 200-day about a week and a half ago, then pulled back to around 850, now rotating higher, about 75 points above that pullback level. I'd love to see it get above 950, which would take us above the high from early August. Now, the question or the challenge for Tesla is there's a lot of overhead resistance. The good news is it's a lot higher than where we're at. It's up around the 1150, 1250 range. That's another 200 to 300 points above where we're at, which is a nice continued rally. That's another, 25, 30% higher than current levels. So there's a lot of space above where we're at. If you're bullish on the markets, this is kind of what you'd want to see with the S&P or some of the other technology stocks that have had good runs. You become overbought at resistance, you pull back, but then additional buyers come in and rotate the price higher. That's why getting above 950, I think, would be really important. Also, keep an eye on 1,000. Big round numbers tend to be meaningful for a lot of investors. I would pay attention to that one for sure. We talked about the XLP in our last segment on sectors, talking about the strength, but again, the challenged relative strength. I want to highlight just a couple names to pay attention to here. Brown-Forman is a name that outperformed the S&P today, up 1%, making a new 3-month high for sure. It's actually right about a 52-week high. It looks like. I was going back. These are the highs in June of last year. So making a new 52-week high today. That's impressive. I like the fact that the relative strength overall has been fairly strong. It's stabilized quite a bit here as kind of everything's been leading out of the June lows. But look at this nice, beautiful uptrend. A push higher, a consolidation, a push higher, and a consolidation. The stepwise motion is the type of name to be really excited about. That pullback to 74, now resolving back to the upside again. And I like the fact that it's approaching previous highs. I'd like to see if it could be able to get above those previous highs. LW, Lamb Weston, different group. This is in the food products group, threatening a new multi-year high. We're right about at that level, right around 84. I'm going to take the adjustments out. I think it's right around the same level. Yeah, it's on an unadjusted basis, sort of in that 84 to 86 range. So we're kind of right about there. So we're very, very close to getting to a new multi-year high. And this would be an interesting chart to watch. Stocks like this that have had good runs, a pullback is absolutely reasonable, but its ability to get above significant resistance levels tells you a lot about the sustainability of the rally. The best thing these stocks can do is power through resistance and demonstrate that there's more buying that has not been done yet and could be able to push these stocks higher. So what's interesting is those are stocks making new, threatening to make new multi-year highs, and they are in a very defensive sector, consumer staples. Let's go get the offense here to finish off our segment. Apple is an interesting chart. Makes me think of the Tesla chart a little bit. Nice run higher, very, very close to significant resistance. So the all-time high here for Apple is back in the 175 to 180 range, maybe a little above that. We're right about there within a rounding error of these all-time highs. And I think that's important to note. Apple has had an incredible run. Absolutely. It is overbought right now, which tells you it's gone up a lot. And that's good, right? That's what we want when we own something in our portfolio. The question, again, is the sustainability. I would not be surprised if we get a pullback. We are setting up so perfectly for seasonal weakness that tends to happen to technology, sort of August going into September. It doesn't tend to be a great month for tech. So you could see a situation where these stocks have had great runs. They now become overbought. You get a bit of a pullback. That's where I would be looking for tactical opportunities on these strong trends that are now pulling back. Anyone that missed the run from mid-June through mid-August, all of a sudden now has an opportunity to get back into some of these names. This is what I think will eventually fuel the rally going into year end, would be the strength of stocks like this after a pullback. But that's what I think is most likely in the cards heading up here pretty soon. Now, you've had other runs from other parts of the technology space as well. I'll highlight two to finish off our segment. I talked about the FANG stocks. I then turned that into the FanMag names. And now I call them the Phenomena stocks, 8 stocks in tech, communication services, and consumer. The 2 stocks that I added to get from FanMag into where we are now are Adobe and NVIDIA. And I want to show you why the 2 of those very much deserve to be in this group of tech and consumer leadership names. Adobe has gotten above its June high around 440. Again, that was the big question mark for the S&P, was getting above the June highs. The S&P and the NASDAQ both completing a rotation above their June highs. That's a new Dow theory buy signal. In my interpretation, I think stocks like Adobe getting above their June high just adds further and further weight to that conviction. Again, balancing the short term and long term. I think long term, this market is setting up to have a nice run going into year end. I think that's probably going to be the case. And I wouldn't be surprised if the S&P finishes higher, if not significantly higher than where we're at now. However, it's most likely not a straight line from June through August through year end. We are entering into a painful part of the calendar going into the fall. And I would not be surprised if stocks like Adobe stall out as they become overbought and they reach significant resistance like the 200-day moving average. I would most likely think of those pullbacks as buying opportunities, but let's wait to see what the charts tell us as we get some sort of a pullback phase. NVIDIA, by the way, not quite getting above that resistance level just yet, setting up for like this mini cup and handle kind of pattern, high around 190, testing it here earlier in this month. Now right back there. Can it get above 190 and stay there? If so, NVIDIA and broadly speaking, semiconductors might be setting up for some additional strength. That is it for our shifting stock segment. We need to wrap the show, folks. Go to the 3 and 3. Let's talk about 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. When we talk about breadth, I like to look at the cumulative advanced decline lines. Now, as I mentioned earlier, the most bullish thing the market can do is go up. And that's absolutely what we've seen from mid-June to mid-August. But what intrigues me much more than the price going higher is the confirmation that we've seen from breadth. The New York Stock Exchange common stock only advanced decline line, the S&P large cap, mid cap, small cap breadth lines, all making new highs. That's why they are color coded in green. That is a big thumbs up. When that stops being bullish, I will tell you, and I will change these from bullish green to neutral amber. But overall, they are showing a lot of strength and broad participation off the lows. That's a bullish reading. Chart number 2 is ConocoPhillips. Energy was one of the weaker areas of the market today, but you'll note that they actually traded higher during the day. So your candle chart is going to have a nice open candle there, which is showing renewed interest, right? Buying interest as the stock opened a little bit lower today. Overall, you can see this rotation back above the 200-day, pull back to the 200-day, and following through to the upside, back above the 50-day moving average, back above resistance. ConocoPhillips, I think, setting up very, very nicely. You can see a pullback among other things overall, but overall, I think energy is setting up very nicely for further upside potential. Qorvo is one of those charts that makes me question the sustainability of semiconductors. What I like is the fact that it had been below the 50-day moving average since last August. For the last 12 months, the stock has been below a declining 50-day moving average. That changed about a month ago. Mid-July, we finally got above the 50-day, tested it a couple times and tested $100 a share, big round number, before rotating to the upside. If it gets above the June high, I think there could be further upside here, but I would keep an eye on the momentum. Semiconductors have not been doing particularly well on a relative basis, and I think it's an absence of momentum that's the biggest question mark. Can the RSI get above 60 for Qorvo and other semiconductors? Folks, that's a wrap for our show, The Final Bar. All of our previous episodes are available on demand for free at StockChartsTV.com. ChartCon is going on in October. Make sure you sign up today. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Have a great night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.